While Wall Street was hitting the brakes, one market on the other side of the world just exploded by nearly 5%. What caused this massive divergence? The answer lies in a single number that just put the US economy on high alert. Stick with me as we connect the dots between a stalling America, a booming Japan, and what the big money is quietly doing in the crypto markets. Macroeconomic events and market impact. The primary driver of market sentiment today was the release of the September ISM Services PMI in the United States. The index registered 50.0%, indicating that the services sector's growth has stalled and is at the break-even point between expansion and contraction. This was a significant miss from the consensus forecast of 52.0% and a notable decline from the previous month's reading. The slowdown in the services sector, which is a major component of the US economy, has fueled concerns about a potential economic downturn. The Business Activity Index, a subcomponent of the report, fell into contraction territory for the first time since May 2020, registering 49.9%. This weaker-than-expected data put downward pressure on US equities, particularly growth-oriented sectors that are sensitive to economic outlook. In Europe, the focus was on a keynote speech by Philip R. Lane, a member of the Executive Board of the European Central Bank, ECB. Speaking at the ECB Conference on Monetary Policy, Lane emphasized the ECB's commitment to its 2% inflation target, stating that the Governing Council considers both negative and positive deviations from this target as equally undesirable. While he acknowledged the medium-term orientation of their monetary policy strategy, his remarks were perceived by some market participants as having a slightly more hawkish undertone, suggesting the ECB may be less inclined to cut rates in the near future if inflation remains persistent. This contributed to a mixed performance in European markets, with the DAX eking out a small gain while the FTSE 100 closed lower. Earlier in the day, Asian markets had a more positive session, with Japan's Nikkei 225 surging nearly 5%. This rally was largely driven by a weaker yen, which boosts the profitability of Japanese exporters. The Bank of Japan is expected to maintain its ultra-loose monetary policy, in contrast to the more hawkish stances of other major central banks, which is putting downward pressure on the yen. Political commentary. While there were no major direct political announcements that roiled the markets, the ongoing discussions around the US government shutdown continue to be a source of concern for investors. The White House has raised the possibility of a permanent downsizing of federal workers, which could have a further dampening effect on the labor market and consumer spending. The longer the shutdown persists, the greater the downside risks to the US economy. Cryptocurrency news. The cryptocurrency market saw some interesting developments today. Bitcoin is showing signs of strength as it enters the fourth quarter, a historically bullish period for the digital asset. Analysts are pointing to falling yields and a risk on sentiment driven by the Federal Reserve's easing cycle as potential catalysts. However, there are also signs of caution, with some on-chain indicators suggesting that long-term holders are beginning to sell and larger investors are reducing their exposure. Bitcoin is currently trading around the $124,000 level. In other news, the tokenization of real-world assets continues to gain momentum. The total market capitalization of stable coins has surpassed $300 billion for the first time, indicating growing adoption and utility within the digital asset ecosystem. The Chicago Mercantile Exchange, CME, is also expanding its crypto derivatives offerings, with options for Solana and XRP expected to launch this month. This suggests increasing institutional interest and a maturing market structure for digital assets. Today, we saw a mixed bag across global markets, with a key economic report from the United States casting a shadow over investor sentiment. We'll also delve into some important commentary from the European Central Bank and, of course, check in on the ever-evolving world of cryptocurrency. In the United States, it was a lackluster day. The Dow Jones Industrial Average managed a slight gain, closing up 0.51% at 46,852.41. The S&P 500 was nearly flat, inching up just 0.01% to finish at 6,737.62. However, the tech-heavy Nasdaq Composite felt the pressure, ending the day down 0.43% at 24,919.37. Across the Atlantic, European markets were also mixed. London's FTSE 100 slipped 0.19%, while Frankfurt's DAX posted a modest gain of 0.05%. It was a much brighter picture in Asia, where Japan's Nikkei 225 had a stellar day, soaring by an impressive 4.93%. In contrast, Hong Kong's Hang Seng Index ended its session down 0.68%. So, what was the big story driving the markets today? The main event was the release of the September ISM Services PMI in the United States. This is a crucial indicator of the health of the services sector, which makes up a significant portion of the US economy. The headline number came in at 50.0%. Now, for those of you who follow this report, you'll know that a reading above 50 indicates expansion, while a reading below 50 signals contraction. So, at exactly 50, we are at a standstill. The services sector's growth has stalled. This was a big disappointment for the markets, as economists have been expecting a reading of 52.0%. To make matters worse, the Business Activity Index, a key component of the report, actually fell into contraction territory for the first time since May of 2020, coming in at 49.9%. This weaker than expected data raises some red flags about the strength of the US economy. It suggests that the higher interest rates we've seen over the past year may finally be starting to bite, and it has certainly fueled the debate about a potential recession. This is why we saw that negative reaction in the US stock market, particularly in those growth-sensitive tech stocks. Now, let's turn our attention to Europe, where all eyes were on a speech from Philip R. Lane, a key figure at the European Central Bank. Speaking at a monetary policy conference, Mr. Lane reiterated the ECB's unwavering commitment to its 2% inflation target. He made it clear that the central bank sees both overshooting and undershooting that target as equally undesirable. While he didn't announce any immediate policy changes, the tone of his speech was interpreted by some as being a bit more hawkish than expected. This could suggest that the ECB is not in a hurry to start cutting interest rates, especially if inflation in the Eurozone proves to be sticky. This created a bit of a mixed sentiment in European markets, with some investors taking a more cautious stance. On the political front, while we didn't have any major market-moving announcements today, the ongoing US government shutdown remains a persistent headwind. The White House has recently floated the idea of a permanent reduction in the federal workforce. Such a move could have a significant impact on the labor market and consumer confidence. The longer this shutdown drags on, the more it adds to the economic uncertainty that is already weighing on investors' minds. And now, for our regular check-in on the world of digital assets. Bitcoin is kicking off the fourth quarter with some positive momentum. Historically, the last 3 months of the year have been very strong for Bitcoin, and some analysts are optimistic that this trend will continue. They point to factors like falling bond yields and the Federal Reserve's current interest rate cutting cycle is creating a favorable environment for risk assets like cryptocurrencies. However, it's not all smooth sailing. A closer look at the on-chain data reveals some signs of caution. We're seeing some long-term Bitcoin holders starting to take profits, and some of the larger investors, or whales, appear to be reducing their positions. This suggests that while the short-term outlook may be bullish, there could be some volatility ahead. As of today, Bitcoin is trading around the $124,000 mark. Beyond Bitcoin, the theme of tokenization continues to be a major trend. The total market capitalization of stable coins has now officially crossed the $300 billion threshold. This is a significant milestone and a clear indication of the growing demand for on-chain dollars and other tokenized assets. We're also seeing more and more traditional financial institutions getting involved in the crypto space. The Chicago Mercantile Exchange, or CME, is expanding its suite of cryptocurrency derivatives. They are expected to launch options contracts for Solana and XRP later this month. This is another sign of the increasing institutional adoption and maturation of the crypto market. So, to sum up today's market action, US markets were down, weighed by a disappointing ISM Services report that has stoked fears of an economic slowdown. European markets were mixed, as investors digested some hawkish-leaning comments from the ECB. Asian markets had a strong session, led by a surge in Japan's Nikkei 225. And in the crypto world, Bitcoin is showing some bullish signs, but with a few underlying notes of caution. It was a day that reminded us just how interconnected our global markets are, and how a single piece of economic data can send ripples across the financial world. That's all for today's market report. I'll be back tomorrow with another update on all the latest market-moving news. Until then, thank you for watching. And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel.